This altcoin is about to bottom and about to have a huge pump. I will be providing you guys with a beautiful, beautiful trade idea on this specific altcoin, which is AVAX. And what we can see over here on the higher time frame, and that is always the most important area to start off with, is that AVAX is currently consolidating and ranging inside of a massive high time frame liquidity pool. So we had massive high time frame liquidity resting over here. Now we know in order for smart money and the bigger players inside of this market, they need huge amounts of liquidity resting somewhere in order to fill their buy orders. Right now we are currently mitigating that liquidity pool, potentially deviating below that entire range low area, and this might be an area where smart money and the market makers are potentially accumulating their bags before a potential high time frame reversal back towards the upside. Now you might think, okay, but Jip, if price was truly bullish, it would wick into this liquidity pool, reclaim it and pump it straight away, right? If price was truly bullish and market makers and the bulls would be strong for more upside. No, that's not the case. We have to realize that in order for smart money and the bigger players inside of this market to fill their orders, it takes time. I'm always telling you guys, a wick into a liquidity pool or a quick tap into a liquidity pool is not enough. The higher the time frame that the liquidity pool has been formed on, the longer it takes for smart money to fill their orders inside of that liquidity pool. And that is why quite often we see consolidation and ranges that are being formed inside of these liquidity pools before the reversal happens. So important right now is to identify a potential deviation below a key level inside of a massive liquidity pool. We have a clear drawn liquidity over here, clear drawn liquidity over here, and over here. Once we have established this bias, the next thing that we have to do is that we have to execute a potential trade. And now we know that in order to execute potential trades, what we have to do is identify market structure, liquidity, and ranges. Now, when we look at this local price action over here, I can identify a very obvious range. And the range looks something like this. I'm going to remove the quarterly levels for now. And what we can see is that we have a high probability range with a range pivot 1, range pivot 2, range pivot 3, range pivot 4, and range pivot 5 over here at the bottom, giving us a high probability range. If we do swiftly switch on the quarterly levels, what we can see that is always very, very pivotal is that the mid-range level is constantly getting respected as support or resistance. This quarterly level is constantly getting respected as support or resistance, and over here as well. And also the quarterly level over here is constantly getting respected as support and as resistance as well. And this offers us a high probability range. Now I can quickly remove the quarterly levels once again from the chart, and I have to work with a range over here. Now when I identify this range, I have to first identify the market structure. And the market structure over here was to the downside, right? We form a low, lower high, lower low. Now, this is interesting because here we get a push up, right? And we shift structure based off this high. Because we open and close candles above this high, they brought us to this lower low compared to this low, they brought us to that high, shifting the structure back towards the upside. But this turned out to be a fake out and to be a trap, because afterwards the price rejected the range high and it moved towards the range low liquidity pool. Now in my opinion, it is a bit doubtful whether or not this is a valid break of structure to the downside. This was a significant low to break, right? Because it brought us to a higher high over here compared to this high that brought us to this low. But I do see the fact that we close this candle beneath the low, the significant low, but the reclaim is oh so strong that I think that also this break of structure might be some kind of a trap. Alright, because we get a very aggressive push to the downside in towards the liquidity pool and a very strong reversal back towards the upside after mitigating that liquidity pool. Now, on this move towards the downside, we had this bearish fair value gap that was being created. And straight, when we went back up again, we invalidated that bearish fair value gap again, and instead we put in a bullish fair value gap. Now this might be an area where smart money might be looking to rebalance the price before a potential reversal back towards the upside. Now locally we have shifted the structure back towards the upside, because locally we were in a downtrend over here, right? Constantly lower lows, lower highs, lower low, higher high compared to this high, but this is low, shifting the local structure back towards the upside. The higher time frame, our forward structure is a bit doubtful. Are we trending upwards? Are we trending downwards? It's a bit doubtful. Because of that, I'm taking into account my higher time frame bias, and I'm also taking into account this lower time frame structure that is shifted back towards the upside. Now when we start looking for potential execution for this trade, we have to analyze the local structure over here and identify where the stops of the people are resting, because we know that we always want to enter where other people are getting stopped out. And what we can see over here is that we have a fake break of structure and a swing failure pattern over here. Now that fake break of structure, that swing failure pattern, is inducing people into opening up breakout long positions over here or pullback long positions over here. Now where are these people going to be placing their stop? They're all going to be placing their stop beneath this low or beneath this low. So we know that in order to think about a potential execution of this trade, the price needs to take out these two lows, and only then I'm going to become interested in executing a potential long idea. Now also when we look at the current price action, then we are potentially forming a range over here, right? Potential accumulation that can be followed up by potential manipulation over here before potential expansion towards the upside, towards our local drawn liquidity, which is a new high over here in the range high liquidity pool. Eventually, obviously, if our bias is correct, we can push a lot higher on AVAX all the way towards new yearly highs, and that can offer a massive RR trade. But for now, the plan is pretty simple, pretty clear on AVAX. I'm looking for rebalancing of this price area. I'm looking to take out this local liquidity over here before a potential reversal back towards the upside towards that range high liquidity pool.